Hi, everyone. This is Jacqui Cooper with J. Cooper Travels Talk Show, and I want to welcome everyone to this episode and also remind you, please like and subscribe. There are many talks in the works, and I want you to be able to enjoy them all. For those of you that are on the YouTube side, thank you so much for also liking and subscribing, and those that are on the audio side as well. So today I have a special guest that I've chatted with before. I'm going to bounce over to him in a second. For those that are new to J. Cooper Travels, I just want to share a little bit more about my background and how J. Cooper Travels started to be. My background is very diverse. I'm a lawyer, but I'm also a special educator, and I also am involved with a lot of different businesses. Every time that I find that I have a passion area, I usually try to start doing something in the business side of it. And that's just me. I'm a serial entrepreneur. But so J. Cooper Travel started many years ago, way before COVID happened. And I am a certified travel consultant because I love traveling around the world with my daughter. And when J. Cooper Travels was initially started, it was primarily about where are we going in the world. Once COVID happened, it was rebranded, and it's now how do we travel in life? How do we travel both personally, professionally, as well as where are we going? And how are we treating each other as well as ourselves? So with that, there's a lot of special stories that I'm sharing. And Scott's story is also very special. As I mentioned, I've had him on more than one time. And the information he's going to share today is really important from your own life planning perspective, because sometimes we don't think about next steps, and we don't think about maybe things that could happen. So I know as an attorney, I'm a pro advocate of making sure you have a will, making sure you have an estate plan, because the unknown, can happen. And it's really important that you have all your paperwork in order. But on the flip side, there's good things that can happen too. So, but I want to bounce this over to Scott right now because we have a lot to cover. And welcome, Scott. How are you doing today?
I'm doing fine. Great to be here. Glad to see you. Excited to be here and talk about all this, especially in the context of which you presented it. A, well, by training, I'm a bereavement counselor. I was a psychiatric nurse for 15 years. Before that, working in an acute care facility with children and adolescents for about 10 years. And I thought I'd be a psychologist when I grew up. And my first internship was with a hospice. Fell in love with that, called them. This is when hospices were first starting in this country, and called them on the fact that they weren't doing anything for children or teens. And they pushed it right back to me and hired me to set up programs for that. And that's basically what I did for the next 25, 30 years. The last few years working in trauma around survivors of murders, that is family members who had a child or someone murdered, and also those who had lost a children, had a child die of any cause, any age. And that's a special kind of grief. So I did groups for that and groups for people who had lost a loved one to suicide. So I'm still on the board of survivors of suicide loss here in town. And that brings me to what I'm going to talk about today, which is insurance, life insurance, not just from the obvious perspective, but why did I go from bereavement counseling to life insurance? Well, one of the reasons is that the family stress that money causes. People are not well educated about their money. They're given a 401k, for instance, by HR, and here, this is a benefit, sign up for it, and they sign up for it, and they don't know that it's vulnerable to the market, and they don't know that it's going to be taxed, or they don't think about that. And so we like to present better options for that. But today, what I want to do, since this is my first time back in a while, is just go through the types of life insurance pretty simply, and to know that there are kinds of life insurance that are not very expensive. A lot of people are afraid to go there, that it's going to cost too much, but it doesn't need to. And I'll start with that kind first. Well, let me break it in. There's two basic categories of life insurance, and that's term and permanent. Term, think of that. It's called term because it's for a set term. It's 10 years or 15, 20, or 30 years. And that is for a specific purpose. These are the least expensive because they're for insurance only. There's no extra cash involved, no cash you can take out or anything like that. And it's a lot like your car insurance. You need to have it. You're fine with it. If you have an accident or something happens to the car and the insurance comes to play, you really like having that insurance. But if you get a car and you have the car for 30 years and you have insurance on it and you never have a ding or anything, you didn't get anything out of the insurance. It didn't give you anything. And when the 30 years is up and you sell the car or whatever, you don't get any money back from the insurance company. So that's term insurance. It works the same way. It's there if God forbid that you die and then your beneficiaries have the money to bury you and carry on with the mortgage or whatever they need to do. It's really good for young families that are starting out and to protect the mortgage, protect against job loss, that sort of thing. And again, to repeat, it has no cash value and it has a specific time limit. When the 30 years are up, you got to do something else if you want some more insurance, and it's expensive at that point to renew. As we get older, our cost of insurance goes up, of course.
I'm
The
gonna
other,
interrupt
yes,
for a quick second just to mention to everyone, Scott's contact information is actually going to be in the blog below. So, and I will be showing his website, later on in our conversation. But if you are interested in contacting Scott, definitely his information will be in the blog below. So Scott, keep going on, because I know that there's always a lot of questions when people are, are shared with insurance, and it can get overwhelming.
yeah, and I'm trying to keep it simple and break it into the basic categories. There's lots of kinds of insurance in these categories. And I'm glad to go over those in more detail. And I think maybe in coming months, I might go into some of these in more detail that people are interested in. And the services we provide are free. So if they want to call, they want to have a conversation on Zoom or on the phone, feel free. I'm not big on selling. I don't like to be sold, and so I don't like to sell. I just provide information, let people decide. So the other common type besides term is permanent. And when you think of permanent, that means the whole life. That is, it's a permanent insurance for as long as the insurance premiums are paid. And so think of it as long life protection. Then there's two kinds. Actually, there's three kinds when you get down to it. There's whole life and there's universal life. The first way to break that up. Whole life is where you have consistent premiums and a guaranteed cash accumulation. You can borrow and withdraw against the cash value. It's suitable for long-term responsibilities such as the dependent adult child's care or post-death expenses like estate taxes. So it's like I say, it's fixed premiums, and it's also, because of the way it's set up, it's usually more expensive. That is, you're going to pay for the whole life expectancy, the whole life that you're alive, but you don't want to be paying for it when you're 100 years old. So you'll end up paying probably a 20-year, pay the whole amount over 20 years, and that gets expensive. The other version of permanent life in the big category is universal life. And the difference there is the premiums are flexible and there's fewer guarantees than whole life. That it's the cash accumulation and the premiums vary because you can pay less one month or pay more another month, and you can take money out against it. You can take money, you can loan yourself some money, and that will affect the death event, the death value. And then there's a universal life to counter some of the weaknesses that it has fewer guarantees than whole life. There's a version of it called indexed universal life. And this is something that we're very excited at where I work, that this is what is the more popular of all the different options. And that is, it's a life insurance plus money above the life insurance that you add in cash. So if you have your cost of insurance is say $10,000 a year, you might put in 20 or 30,000, and that extra money acts a lot like a Roth IRA. A Roth IRA is an IRA that you put in money that's already been taxed. So you don't, when you take the money out, you don't pay taxes on it. So that this is indexed. The first part of the word, the index, is really important. It's a contract with the insurance company. The money never goes into the market. You're not vulnerable to the market. So, but you can mirror, say, the S&P 500, and however it does going up, you can grow your money that way. But in the contract, it ordinarily has something like a 0% floor or a 0.75% floor, so that on down years, such as the one we're having, you would still earn 0%. That is, you wouldn't lose anything, but you wouldn't earn anything. But that's really nice if compared to, say, going down 40% and then having to earn 80% to get back to zero, and maybe taking that a few years. So this saves that time, and it comes out ahead by compared to being in the market on up and down years. So you get the up, but you don't get the down, and so there's no downside risk with this. The other part is that it's life insurance. As life insurance, it's tax-free. The money that you take out, the money that gets passed on to your beneficiaries, the money that you loan yourself is tax-free. This has many uses. A lot of times, families will buy these for their children, and they'll fund them over time. And by the time the child is in college, they may have enough there to pay for the college expenses, or they may have enough for a down payment for a home, or if they're stay with it up until retirement age, and depends on how much they put in, depends on the policy. Almost all the insurance producers have these. By the time they're 45 or 50, they could have $1 million or so in there to set aside towards retirement. Here's something that people don't understand about this. I think going into retirement, they work 30 or 40 years towards retirement, and they think that all they're going to have Social Security and maybe a little savings, and they'll be fine. But they don't realize that they're going to be living probably another 25, 30 years after retirement. And will they have enough money saved for that? And they may think that, and I know we thought this, that, well, yeah, I have money for it, but it's not going to be as much. I won't need as much because I'm not going to be working. I'm living more simply. But that doesn't take into account medical bills. I mean, we rarely live until we die, and that's it. We're fine. And then one day we die. We ordinarily get sick, have injuries, have heart attacks, cancers, or some sort of unfortunate things like that, that our body starts breaking down to get us ready to die, I guess. So that's just something to take into mind when you're planning for retirement, that you should be looking at ways to get ahead. And index life insurance, in addition to what I've described as being tax-free and being indexed with no downside risk, they perform very well compared to other instruments. They're the one that Transamerica's had, when you look at it, it's never had anything less than a 9% per year on growth. Because of how they're structured. You have to be careful with them, though. They can be structured so that the agent can get really good commissions, and they do that by upping the death benefit, and the family doesn't get as much of the growth that they would like. So you have to be careful how you structure them so that you have the death benefit, but you're maxing out the amount of money you're putting in addition to the death benefit. And all that's regulated by the IRS statutes. So some of the uses for IULs are, besides giving them to children, our grandchildren all have them. As set up a family bank, or to plan for tax-free retirement, for college expenses, for down payment on a home, to set up for a future, setting up for getting a future business going, say in real estate, so forth. There's just a lot of reasons to use it. There's no, once it's past its first 10 years or so of building up value, there's no limit to what you can use it for. it's like a savings account. It's like a Roth, but without the time limitations or the donation limitations, and the use limitations. There's just use it whatever you want at whatever time of life you're in. That it works out that with the money you've put into it. Uh,
So
so
quick question,
sure,
there's different, I have many listeners, all different ages. So depending upon, what their age is, and what phase of life, are there certain things that they should be thinking about, looking into when they talk to you? Obviously, if you're under 30 versus 30 to 50 or over 50, what are some of the products or things that they should be thinking about when they end up approaching you to talk to have a
sure.
consult?
Yeah, excellent question. I think the under 30 people, most of them, I think, would want to go with the term. Unless they're doing very well, have good finances, the term is what they're going to be able to afford. They can get, for $1 million, they can get something like $1 million of coverage, something like $80 a month or so, depending upon their health and that sort of thing. Don't smoke. Oh, please don't be a smoker. That just hurts you on any of these things, in addition to your health. So I would say that's the under 30. They do that until they are doing well enough financially. They can then go into an IUL. Like I say, whole life is very expensive compared to an IUL, and you can do a lot more with an IUL than you can with the whole life. And you just a straight universal life, I don't understand why someone would do that when the IUL is there. And you can use that um, up until you're pretty late. A term insurance, you do 30 years when you're 40, so that takes you up to 70. But then what do you do? And you might be enough in savings that you don't need any more insurance. But a lot of people will do a term and then they'll roll it over, convert it to an IUL at some point. Um, and go on from there. Also, there's something that we have at Transamerica called Everest, which is really good for burial expenses. If you're older and you're more concerned with that, it's a good supplement to life insurance. In fact, Transamerica has it as part of their IUL package. I think it's for free. And what it does is, if if that time comes and you need to be buried or whatever you're going to do at the end of life, they come in. You've already set it up with them. They come in and they will negotiate with mortuaries and so forth for the best price. They will they have a thing where you can put uh, all your papers in the cloud, where it's there, it's permanent, it's there for as long as you want it there, and it has, so all your family has to do is go there and they'll have whatever they need in the way of legal papers and stories about their family and so forth. What I really like about it is that they pay within 48 hours. So when the death has happened, the mortuary needs its money, and they come through with the money right away. It's not as huge as the life insurance. It's usually $40,000-$50,000 or so, but it takes care of those expenses, and as well as letting them know what your wishes were and so forth. So it's a very nice package. There's a lot more to it, and it's just nicely done, thoughtfully done. It's been around for years and just recently merged with Transamerica.
Good information. I want to show your website, so give me a
Sure.
second while I share. For those that are on the video side, you'll be able to see Scott's website with his phone number and his contact information, and you can kind of scroll down to see again, the diversity of products and services that Scott offers. And again, is there an email that you would like them to contact you on, or is it best for them to give you a phone call?
Either is fine. The email would be Scott NSD, as in Scott in San Diego, scottnsd@gmail.com. That's my personal email that I use just for business.
Yeah,
And my phone number is on the site, but I can say it if you don't
sure,
mind. It's
sure.
1-858-610-3488.
Yep. And again, all those contact information and the website and everything will be in the blog below. So that way you'll be able to reach out to Scott. I know, there's always, no matter what profession you're in, there's always terminology and language that kind of is kind of heavy, but from the perspective of not always knowing or understanding it. So it's important to reach out and consult with someone who does know. And as I mentioned, I've known Scott for a number of years, and he can definitely provide you with information so you can make an informed decision on whatever's best for you and your family. Any last minute thoughts, Scott, before we sign off? I know you'll be on other episodes in the future as well.
Sure. What you've said has been lovely and helpful. Thank you. And what I'm wondering is what would be best to talk about next time. What would people like to hear about? What do they need to know? I can go into comparing the costs of the different kinds of insurance, or what, there's a lot of things that people don't understand or misunderstand about insurance. I'd love to clear those up. So whatever people want to maybe put something in the YouTube or somehow contact me or you to let us know what they'd like to have covered. I'd just like to follow where the need is.
Yeah, for sure. And also, I just want to mention to everyone who is listening as well, my background is law. And so if you are not sure if you don't have a will, or you're not sure if your will's up to date, or you need help with estate planning, definitely reach out to me so I can talk to you about how to obtain affordable consults and wills and that type of thing, because it sort of goes hand in hand with planning from the life insurance part, as well as from the letting people know what your desires and wishes are at the end of your life, or even throughout your life. Because again, you might need a medical power of attorney or other things. And those are papers that are easy enough to create, but you need to do it before you actually have a need. So everyone who's listening, thank you so much for hopping on. Definitely like and subscribe. There's going to be a lot of other great talks, including more from Scott. And as I always mention, be kind to yourself, be kind to others. We're all part of one world, and we're all here together. So have a great day. Thank you, everyone. Bye.